and we're already on week 12. So let's go. All right, SMIC Plus members, if you're still interested in joining SMIC Plus, you can still email the or Venmo the SMIC account. Unfortunately, the order for the shirts and stoles are no longer available, but if you're interested in the list of finance seminars, the list of internship and SMIC presentation PowerPoints and recordings, you can still join our Plus account. So, and our social medias, if you guys are interested in keeping up with our events, you can pull out your phones and the camera option. If you scan the QR code, the list of the link tree will open. And then we have some quite insightful events for the fall, for the spring semester. So we will start to cover our next event will be the crypto blockchain presentation by Albert. And then we have the following week, the mini IRC, the final round presentation with Kyle and Cameron. And then lastly, Dr. Roman will be presenting his economic data, and this will be a collab with Finance Society. And now we'll be hosting Matt Magill. Matt began as a student athlete at NYU Stern for the wrestling team. After double majoring in finance and international business, Matt became a CFA and worked for PIMCO for 7 years. Currently, Matt works for Owl Rock Capital, which is a private credit manager with over 17 billion assets under management. I will turn it over to Matt to present.
Awesome. Thank you, Allegra, for having me. And thank you to the rest of the Student Managed Investment Club. I think this is really cool what you guys do here. So I know, first and foremost, my heart goes out to all you. I know this is probably not how you expected to spend a year in college over Zoom, but hang in there, and I promise it'll get better. I think we're on the cusp. We're starting to get back to some normal here, and hopefully, whether it's post-college or if you have another year in school, things will pick back up. But I can tell you, you'll look back on this experience and hopefully learn a lot from it, and hopefully laugh at the end of the day that you had to spend a year of college over Zoom. And hopefully all of your friends and family stay safe. And for those that have been negatively affected by COVID, I empathize with you. It's been a challenging year for all of us. So thank you for having me. I know Allegra sent over, and thank you, Allegra, for coordinating this. And she sent over a couple of the topics that would be helpful for me to cover. So maybe I'll spend the first, I don't know, we'll see how long it takes. I'm not that interesting, but we'll see, 25 to 30 minutes about, kind of my timeline, starting with post-grad, and then, where I am today and some trends that I think could be helpful. And then I'll try and leave plenty of time for you all to ask questions. So maybe I'll start with what I do today, and then I'll go back to the timeline of college, because I think that'll be helpful to, frame of reference for what my current role is. And as Allegra mentioned, I'm a vice president at Owl Rock Capital. And so Owl Rock is a private credit manager. What we do is we finance transactions by providing private loans that we directly originate. And so, for example, when a private equity company is going out to buy a company, we provide the private financing of that debt. So we work with both private equity companies and primarily US-based upper middle market companies to provide loans, refinancings, anything that you can imagine on the private debt side. My role at Owl Rock is I handle and I lead the West Coast investor relations team, focused on RIAs and family offices. So an RIA is a registered investment advisor, similar to a financial advisor, except they don't charge brokerage commissions. They only charge a flat fee for their clients. So most of my clients manage somewhere between $500 million to multiple billions of dollars on behalf of either one family or multiple families. And so my role is to try and get them to invest with Owl Rock. And then once they do invest with Owl Rock, try to keep them happy with their investments with Owl Rock. That's kind of the short way of putting it. And I know it can be complicated, so happy to answer any questions in the Q&A. All right, so how did I get here? First, as far as like my experience in college, Allegra mentioned I was on the wrestling team. I went to NYU, and I didn't know what I wanted to do after school. I tried to keep my majors as broad as I possibly could. I knew I wanted to do something with business. I knew I wanted to be in finance, but frankly, I wasn't sure what types of jobs I would be interested in and what types of jobs would be available to me post college. So what I did was I said, how could I be as broad as possible in my major, but still get relevant experience that could apply to a lot of different fields? And so I double majored in finance and international business. And I figured, anything in the business realm, I can at least have some type of avenue to go towards. And at NYU, they had a really good career department where they help you with the interview process. They hold career fairs, things like that. I did all of those things, but frankly, I think the biggest reason for me landing a position at my first firm out of college, Lord Abbett, was the relationships that I had. When I was in college, I was a wrestler, as I mentioned. Sometimes I had a couple surgeries, so I was in the training room a lot. My athletic trainer that was dedicated to the wrestling team, her husband worked for a firm, Lord Abbett. And she's like, hey, I know, we became pretty close. And she said, hey, I know you, are into finance, you're good with people. I think this job called being a wholesaler could be really interesting to you. And I said, all right, what's that? Sounds interesting. I wanted to get a job locked up before I graduated. So I started the interview process with Lord Abbett and was able to get hired as an internal sales desk wholesaler for Lord Abbett based out of Jersey City, which is right across the river in New York City, Manhattan. And basically my job was I covered Connecticut, parts of New York City, and my job was to call on financial advisors, similar to my role today, but I was an internal, meaning typically there's two investor relations people that cover a specific territory for an asset manager. You start as an internal where you're mostly on the phones and over email. And then the goal is to get to be an external where you're the one in person doing the meetings. You typically live in the territory that you cover, and you're responsible for ultimately handling those relationships. It was a really interesting experience. I liked it a lot. As far as I was involved in the markets, I was able to kind of know what was going on in the markets, learn about our strategies, understand how we were positioned. But I also had the human element where I had relationships, both a combination of servicing clients and prospecting clients. And I realized during that position that I liked, the job because I could learn and still be involved in the markets, but I wasn't necessarily working on my own in a spreadsheet or, on the analyst side. I had some human element of the connection with people. And, I think that was interesting to me. And I realized, I wanted to stay in a similar type role, but I wanted to move away from covering broker dealers and move towards covering more institutional clients. And hard to do that when you don't have a lot of experience. And so, the institutional client coverage positions are always highly coveted. And so what I did was I said, well, why don't I start my CFA? I can't get older overnight, but I can try and learn and get smart and have some more credentials behind my name that can give me more experience. And so I started my CFA. And around that same time, I was able to move over to PIMCO. One of my good friends that I started with at Lord Abbett had moved over to PIMCO. And, I wanted to be at a firm that would enable you to learn more, that was interested in your personal growth as well as, the bottom line. And at Lord Abbett, they were like, yeah, sure, go for your CFA if you want to. But really, we'll promote you to be an external if you just do your job well. The problem for me was I was living in New York City. I'd gone to college in New York City. And I didn't necessarily just want to be sent out to Kansas City or Oklahoma and cover a random territory that I wasn't sure where I was going to go. So I was like, all right, maybe I can control my own destiny a little bit more. I'll take a sidestep, do the same job at PIMCO, a little bit of a larger company. I have some friends over there, and they were actually super supportive about the CFA. They were like, we'll actually pay you a bonus each level you pass. We'll hire a teacher that they brought in each week to help us. And so it was a really cool experience having that support behind you by a large organization. That was really something that was really personal growth oriented. Obviously, it would help PIMCO to have more employees as CFAs, but they were really good about helping us out. And so I worked in the PIMCO New York office for a few years and was able to finish up my CFA. One of the questions that Allegra had asked me is like, what made you want to become a CFA? At that time, I was considering going back to school to get my MBA or do the CFA because I wanted to get a little bit more experience. I wanted to be, open more doors to my career in a faster way. And since I had gone to NYU, I was still dealing with a lot of college debt. I paid for college myself. I worked throughout college as well as wrestling. And so I was, trying to figure out a way to still pay off my NYU loans. And MBA route looked really fun. I had a lot of friends that went to their MBA and saw them on their party buses every weekend and, great networking opportunities that they had. But it was also pretty expensive and I didn't want to go back into more debt. And so I decided to go the CFA route. And I figured, one, it's highly respected. I control my own destiny. If I pass each level, I'll get the CFA and it's much cheaper route than the MBA. And then two, it allowed me to learn more about the financial industry that maybe I didn't have exposure to in my role at Lord Abbott or PIMCO, and allowed me to be a lot more comfortable in talking about complex financial instruments and complex topics with clients. Being younger and being the fact that my average age of my client was 60 years old, they immediately had a little bit more respect for what I was saying versus who is this young kid coming in and telling me he knows what he's talking about. He didn't live through the 1980s inflation shock and the oil of 1994 Asian currency crisis. Like, you're right, I didn't, but I learned about it and I'm able to communicate what happened. And so the CFA was super important for me because it opened up a lot of doors that I don't think would have been opened as early on as they would have been without it. And so once I finished I'd say the other thing about the CFA, I would encourage all of you to take a look at it. It is a marathon. It is not necessarily something that's incredibly hard in any individual topic. If you guys are all finance majors or economic majors, like you all are smart enough to complete the CFA, it's really a matter of how much time do you want to put in to get the test done. And so I was lucky that I had one of my best friends who had brought me over to PIMCO. We started it together and we just looked at it as a competition. Like, how can we get this done as fast as possible and push each other and be miserable together in the late nights in the office studying so that we can, trudge through this and advance our careers. And we would take a practice test and, if he would beat me by one score, I'd be like, all right, let's do another one on Saturday. And then I would beat him by one and we'd do another one. So it was helpful to have, misery loves company. And that process is definitely not fun, but helpful to have other people involved that are going through it with you. So I was lucky enough to have my friend and we passed the CFA in 2 years. We did level 1 in December and then we went June. So passed all 3 in a row. And that allowed me to open up the door for PIMCO, where they were launching a new desk in Newport Beach, California. At the time, PIMCO, which is, for those of you who don't know, PIMCO is a global asset manager. They primarily specialize in fixed income. So they have a lot of mutual funds, ETFs. They also do some private credit, some private equity. They are, in a lot of your parents' 401k plans. You probably see them on the news sometimes. They're a pretty big asset manager. And so at the time, most of the institutional team was based in Newport Beach. All the retail or wealth management team was based in New York. And as I mentioned, my goal was to get a little bit more towards the institutional side of the business. So for PIMCO New York, I was covering broker dealers and financial advisors in Ohio. And this opportunity came up to start a new desk in Newport Beach, where they never had a wealth management presence or an investor relations team covering wealth management clients in Newport Beach. And so I applied, a couple of my friends did as well. And so 8 of us all at the same time moved from the PIMCO New York office out to PIMCO Newport Beach to build this new team. And I'd never lived in California in my life before. I grew up in Philadelphia. I'd spent 10 years in New York City. And I said, you know what, if my goal is to get to the institutional team, I might as well go to the home office where most of the institutional team is located and take a bit of a risk on the opportunity. Long story short, it worked out over the last 5 years. So let's see, from 2015 to 2020, I worked at the PIMCO Newport Beach office. And shortly after I moved out, I had the opportunity to join the RIA and family office team as an account manager. And basically, I built a relationship with the head of that team. We were friendly. We saw each other in the office. We played golf maybe once or twice. And then when the opportunity came up for an opening on his team, I made sure to reach out to him, let him know I was interested, and went through the application and the promotion process and was able to get that job. And so for about 4 years for PIMCO, working out of the Newport Beach office, I covered the West Coast, RIAs, family offices. And for PIMCO, it was very much a balance between servicing existing relationships and selling and trying to raise money. Now, the advantage that we had at PIMCO is most people that I was calling on knew the brand name of PIMCO. They had heard of us. They liked our research. PIMCO was known for our macro, economic outlooks. And so that was helpful to opening doors, but it was a balance, I would say 50-50 between servicing the clients that had about $4 billion invested with PIMCO that I was responsible for and lead account manager on, and then trying to raise more money with those clients and some new prospects that maybe hadn't ever used PIMCO before. And part of the job that I like a lot is you're really running your own business inside of PIMCO. So I had my own territory. I had 200 or so clients that had $4 billion invested with PIMCO, and I could do what I wanted, right? Some days I could, go on a campaign of servicing clients and calling clients to give them an update. Some days I could call new prospects and try to get them interested in PIMCO and raise money. And sometimes it was a combination of both. And so I really like that role because it gave me a ton of experience in the RIA market, which is really a growing part of the wealth management and financial space. And that allowed me to get the opportunity to join Owl Rock. About a year ago, I was approached by Owl Rock, who wanted to build out their RIA and family office team. They were looking for somebody who had experience with alternatives, who covered the West Coast already, who wanted to live in California, and had some relationships, frankly, that they could leverage. And so because I had some strong relationships with my clients at PIMCO, I was able to get the job at Owl Rock and moved over about a year ago. So May 2020, I moved from PIMCO to Owl Rock for the opportunity to lead their West Coast team. Whereas at PIMCO, there was 10 of us on the team. I covered Southern California, Arizona, Colorado. All 10 of us reported up to our manager of the private client group. He reported up to the head of sales, who reported up to a committee on a committee, right? Like there was a big bureaucratic structure at PIMCO. It's a really large organization. Owl Rock gave me the opportunity to lead the West Coast and report directly to the president of the company. And so there's only myself and one other person who covers the East Coast at Owl Rock. And so the opportunity for me to be more involved in business decisions, to not be layered by as many people above me, until I get to the ultimate decision maker of the company. It was kind of a bet on myself versus riding the PIMCO mothership. And so far it's worked out well. Since I've joined Owl Rock, last year we were at about $17 billion in assets under management. And today we're at about 27 billion in assets under management. So we've grown pretty quickly. You may see us in the news. You can do a quick Google search, and we're going through a merger right now with another firm. So there's a lot of really interesting stuff that's happening, and it's been a good move so far. I think the one thing I didn't anticipate is that in May 2021, we'd still be doing this over Zoom, and I'm not in the classroom seeing you all in person. So, COVID has definitely been something that I don't think any of us could have prepared for, but it's definitely made things a little bit trickier when you're joining a new firm. And for example, my boss, who's the president of Owl Rock Securities, I've never met him in person. um, and I've only met 3 other people at the firm. And so now, my day-to-day role at Owl Rock is I work out of my home office here in Laguna Beach. And hopefully at some point we'll be able to get back to traveling, or I can meet clients face to face. I have an internal partner who's based in New York who works for me, and he helps me cover the West Coast. And then we have a number of different support team that helps us. So far it's been good, and we can circle back to Owl Rock if you want me to answer any more questions about kind of the specific role. I'm happy to. Let me try and tick through a couple of these other questions before we open it up for Q&A. And hopefully this is helpful. Advice to students who are wanting a career in the finance field. I think my biggest advice would be, you're already ahead of the game and doing things like this that I wasn't doing when I was in college. So I think just having an awareness and an understanding of the different options that are out there for you in finance is really important. I think too, I saw on your agenda coming up, you've got somebody coming in to talk about crypto and blockchain. Like, understand crypto and blockchain. That is coming down the pipe in finance. And whether you want to believe it or not, it is going to be, in my opinion, widely adopted in the next 5 to 10 years. And I think, I admit I was late to the boat on crypto and Bitcoin, and always thought the blockchain aspect was interesting, but I would say understand it, at least have a base level knowledge, because that is going to be something that's definitely a part of finance moving forward. I think, but more broadly, advice to you all who want a career in finance is there's tons of different roles that you can do in finance. You just look at Owl Rock or PIMCO, an asset management firm, and you think about, you have people like me, the investor relations team that are raising money and talking to clients, or the investor relations team that's handling client accounts. You have the operations team that's responsible for making everything work together, coordinating internally. You have the marketing team that's responsible for creating fancy flyers and presentation decks that are helpful for me when I'm going out to talk to clients. You have an HR team that's responsible for helping employees internally. You have the investor team, which are the people that are smarter than me and actually, making the trades and, doing analysis and figuring out what are the actual companies that they want to invest in. And so I think first and foremost, I think you should know there's a lot of different ways that you could play things in finance, depending on what you're interested in. And I would say over the next, year, 2 years, as you look to graduate, I think figuring out what types of things you like to do and types of things you don't like to do are equally important, right? There's some people that prefer to work alone and prefer to, do analysis on their own. They like to be given a project, let's say in a spreadsheet, they'll get it done and they don't want to talk to anybody while they're doing it. And then when they're done, give me the next project and I'll hammer that out. Then there's others that much better in group projects. They want to be talking to people. They're more outgoing. Maybe they're not as in tune and they don't want to be, buried in the spreadsheet all day. You have some that want the stress and I'll say the highs and lows of making a good investment or a bad investment, and the stress of, taking that upon themselves to underwrite and, invest millions of dollars upon other people's behalf on what they think is a good opportunity. And there's some that just want to talk about the investments and not necessarily be responsible for the ones, underwriting those. So for me, I realized that I wanted to do a little bit of everything. I knew that I didn't want to be buried in a spreadsheet. I wanted to talk to people. I wasn't going to be a good analyst that just sits there, on my own. But I also knew that I wanted to have autonomy and control within my job. And, I do with my role now, and that I can, on a day-to-day basis, nobody's checking in on me as far as what you need to do. Here's what you should do. It's, hey, you run your business inside of Owl Rock, and the numbers at the end of the day show for themselves. If I'm doing my job well, investors that have invested with Owl Rock are happy and continue to place more money with Owl Rock. And I'm also bringing in new clients And the cool part about my job, as I mentioned before, is like I have to know a little bit about the markets, a lot of bit about the markets. I have to know what's going on with Owl Rock strategies. I also have to know how to talk to people and kind of cater my pitch depending on the type of client that I might be going after. So I think figuring out what you like and don't like is equally important. And it's okay if you take a job or an internship and you hate it. Just make a mental note, jot that down. Like, okay, I know I don't want to talk to people every day. I want to go more towards an analyst role. Or I know I don't want to be responsible for underwriting an investment decision. I want to go more towards an account management, client facing role. So I think that's equally as important. What do I like most and least about my current work? That's a good question. That's a tough one. I'd say I'm very competitive. So what I like most is when I successfully close a new client and bring in new business to Owl Rock. Not only do I get paid to do that, but I also, there's nothing like a win and bringing in a new client to the firm, and that's probably the most enjoyable part about my job is when you have a win and you're able to share that success with the team. I would say, what do I like least about my job? I mean, it's tough because it's kind of out of my control, but I would say currently with COVID, being cooped up in this home office and not being out having fun with clients and meeting clients in person, that's probably my least favorite currently. I think that'll start to change, but fun part about my job is when I go travel on the road and meet clients face to face, and depending on the client, we might meet at their office and just do an in-person meeting. I might be meeting with an investment committee and presenting to 10 people around a table, and they're grilling me about either their current investment or why should I invest in Owl Rock. Or maybe we're doing something fun. We're going out to play golf with clients, going to dinner, or going to an event. It's different every day, and that's probably what I like most. And today with COVID, it's similar every day, right? I'm on Zooms, I'm on calls. I have a Zoom call right after this. And I think everybody's starting to get antsy, as I am, about getting out and got back to some normal. Last one, and then I'll stop, and happy to take any questions that you have or expand on anything that I was light on. And I see there's some questions coming through in the chat, so I'll check these after this last one. But what are some interesting trends that future applicants should be aware of in financial consulting? Really good question. I would say a couple things. I think the move from commissions-based broker-dealers to fiduciaries is accelerating and will certainly continue. So 20 years ago, the majority of financial advisors charged a commission on every trade that they made. And that's how they made their money. They charged a spread, whether they were buying a stock, buying a bond, or investing in alternatives. Today, it's probably closer to 50-50 still charge commissions, and 50% are on this fee-based model and or what is known as fiduciaries. I think that trend is going to continue to accelerate and probably go towards 80% fiduciary over the next few years. And the reason is it makes sense for everybody. For clients, if you invest $1 million with a financial advisor and they charge you a 1% flat fee on your assets, they're incentivized to have your money increase so that they can earn more revenue on that $1 million. If you go to 1.5 million, their 1% fee increases. Versus on the commission side, let's say you give $1 million to a financial advisor and they just make a bunch of trades and your money still stays at $1 million. The financial advisor is making money, but maybe the client's not. So the fiduciary aspect puts RIAs on the same side of the table as their clients, where everybody succeeds if the client succeeds, which I think is really important. I think transparency is going to continue to accelerate, and I think that's something that has exacerbated the trend to fiduciary wealth management. And then I also think, lastly, the reason that that's continuing is if you're a financial advisor, and let's take that same $1 million client, if every day you come to work and you have to sit there and think, all right, what trade am I going to make so that I can make a commission on that trade today? It's a transactional business, meaning every single transaction you're trying to figure out, how can I make some spread on this? In a fee-based business or a fiduciary business, and you say, hey, I'm charging 1% on the client's $1 million, you are annuitizing your business, meaning that financial advisor can create a business plan and say, I know I'm going to earn 1% on this $1 million account. I bring in another account. I know I'm going to earn 1% on that account, and really create an annuitized business model where they don't have to sit there every day and figure out what trades am I going to make. They can focus on the more important things, which is servicing their clients, creating full wealth plans for their clients so that they accomplish their goals. They can spend more time growing their business and targeting new clients, and really take a more, in my opinion, appropriate approach to investing, which is a long-term approach that's focused on how can we accomplish your goals versus what trades can we do today that'll earn me a commission. So this is no offense to anybody who is maybe interested in going to the broker dealer side. I think that even on the broker dealer side, whether it's Morgan Stanley, Merrill Lynch, Wells Fargo, UBS, those are kind of the big four broker dealers or wirehouses that we call. All of them are moving towards the fiduciary model as well. So within Morgan Stanley, for example, they are incentivized to open up accounts in their fee-based program, which charge a 1% fee on their account versus keeping money in their brokerage account. And they're doing that because they know the RIAs have continued to take market share from the broker dealers. I would say that's probably the biggest trend that I see. I think, COVID has accelerated probably a lot of things. I think one, and this, I'm not going to spend a ton of time on it because you guys all probably know it, but technology, right? I never did a Zoom call with a client until 2020. Never. I never did a screen sharing with a client until 2020. And firms were scared of it. Like, you would say, let's hop on a Zoom call. They're like, you would see a bunch of black squares and nobody's sharing their video, and it's weird, right? Now, when a client says, yeah, let's set up a meeting, I have to ask them, like, all right, do you mean like you want to grab coffee outside, or do you want to do a Zoom meeting? Like, you have to clarify. So I think technology and software is going to continue to accelerate meetings like this. I think it's going to make me probably travel less, right? If I was supposed to go to Seattle and have 5 meetings with a client, maybe I only have 3 meetings with the client, and the other 2 I do over the phone or through Zoom. And I think it'll create more efficient travel where people aren't just flying across the country to meet. I think there's certainly time and place where meeting in person is important and impactful, but there's certainly times where doing something over Zoom or doing something over the phone is just as impactful. And I think that trend will accelerate going forward. Let me stop there. I just rambled on a bit for a while. I think we're at pretty close to about a half hour, and see, I saw there's some questions in the chat, so maybe I'll tackle those and then open it up for some more questions. It looks like Dahlia asks, what are positions in finance that require group work, and what are the positions that require dealing with customers? Okay, good question. So I would say anything. Okay, it's hard to find a job that doesn't require group work post college, I would say. So maybe I should have clarified my comments a little bit better. But there are jobs that tend to create more interaction with people and jobs that create less interaction with people. So I would say jobs like a financial analyst, where you're the one responsible for doing fundamental analysis on an investment, creating a research report, traders, those types of jobs are probably less focused on working with groups and talking to people. I think client facing, marketing, those are the types of jobs where if you're an outgoing person, if you're more of an extrovert versus an introvert, you're always going to be talking to people and, being the face of the company, for lack of a better term. And so I would say for those that like to talk to people, they're more extrovert, like the client facing side and the marketing side are probably more of the positions that require maybe not group work, but relationships and human interaction versus just pure research and fundamental analysis. And so your second question, like what positions that require dealing with customers? I'm going to flip this around, because I think that no matter any job you have in any role, everything is sales and everybody has a customer. I'll give you a couple of examples, right? If you're a research analyst and your job is to research value equity companies and then present that research report, Your customers are the PMs that are reading your research report, who you want to make sure they think you're smart and do good work. And your sales aspect is you have to sell them on, hey, here's why my research is sound. Here's why I think this company is a buy or a sell. And if you don't do a good enough job, whether it's selling them through the report or in person in the meeting, they're not going to maybe respect your analysis or take your recommendation. In my job, my customers are the end clients and the investors. And my sales is trying to sell Owl Rock, bring new money into Owl Rock, and also trying to keep customers that are current investors happy. So I think in any role inside of finance, or for that matter, any job, right? If you're a tire salesman, or if you have a tire company and you need to sell tires, you need to have good marketing outside your store. You need to have a good product for your customers. You need to have good customer service. You need to sell tires. Like any job, I think, has an element of dealing with customers and sales. And that was probably something that when I was in college, I was afraid of the word sales. I was like, oh, I don't know. There's like used car salesman, sales. I don't want to be in sales. But at the end of the day, everything is sales, and it's either selling yourself and your ideas or selling a product or some combination in between, I would say. So I'll stop there and see if there's any other questions that will be helpful for me to answer. Happy to talk about my experience, happy to talk more about my current position, Owl Rock, trends in the financial space, markets, whatever would be most helpful.
Yeah. First of all, we really appreciate you being here, Matt. I have a couple questions. I'll just ask one, and hopefully it'll warm up other people to unmute themselves. Cool. I'll start with this one. I like your comment on kind of the industry being more transparent, right? We don't, when we send off our money somewhere for somebody else to manage it, it's, maybe it used to be like, oh, it's gone and I don't know what's happening with it, right? I just wanted to ask how you see, the industry, how the industry is going to continue to develop that, and what is being implemented today or tomorrow that wasn't there 5-10 years ago.
Really good question. I'll give you a couple examples. So I'll use Owl Rock as an example. So everything we do is private funds. So when an investor invests with Owl Rock, you can't just enter a ticker, and buy it. You have to fill out subdocs, and you have to send in your driver's license and your trust document and your W-9, and we have to go through this whole review process. And basically, it's paperwork that you have to do in order to actually invest. So 5 years ago, you would send in your subscription documents, and then you might be able to talk to somebody on the phone to get an update. And then every quarter, you get a hard mailing copy of your statement, right? All right, here's how your performance was for this quarter. It's on a quarterly lag because it takes us 3 months to price things because everything's private. And so you had limited transparency, not only on the way in, but also keeping updated on how performance is doing. Not only has the internet obviously changed that, you could Google a company that you're invested in, you could Google, a bunch of different things, but also now they have portals where on the way in, when I'm onboarding a client, there's this site we use called iCapital, where you literally online can fill out the subdocs, can e-signature subdocs, submit a copy of a driver's license, and technically you can submit all of this paperwork online without ever having to lift a pen and print anything out on paper. And then once you make the investment, you can check online your account and see, okay, everything's been submitted, or okay, I know my 3/31 end of quarter balance is X, and here's the investments. And you have access to a lot more just like documents and materials through this online portal that just didn't exist before. So I think that's one, is just technology and software has allowed for more transparency and given access to investors and clients that might not have had access to it before. I also think that you've seen over the last, really since 2008, a lot more regulation that has pushed for transparency in the financial services industry. And so whether that's making the broker dealers disclose what spreads they're making on every trade, whereas before they didn't have to tell a client, hey, if I'm buying Apple and selling Tesla, I'm going to make 2% on this. Now all of that has to be disclosed. And so consumers are more aware of the costs and the options. Now, there's also a good benefit of that transparency too, is as there's been more regulation and transparency in the costs have come down dramatically in the financial industry. Now, it's not necessary. It's okay for a firm like Owl Rock, where our fees are relatively high compared to, say, an ETF or a mutual fund, because we're offering a private investment, but fees have certainly come down across the board because there's more scrutiny and transparency on fees. Investment managers charge less. And so you're getting services for cheaper because there's more information available now than there was previously. So, before, it was unheard of to be able to invest in, let's say, an ETF or a mutual fund, that now you can invest in ETFs and mutual funds that charge like 1 or 2 basis points to give you index exposure. Like, that was unheard of 10 years ago. And I think that cost cutting continues overall.
Yeah. So it looks like you tackled some of Joseph's question in there. I don't know if you saw that, but you're definitely tackling some of those points too. If you have any more kind of comments on, how I guess the industry as a whole is shifting with, I guess, robo advisors too. And I a little bit touched about ETFs or passive ETFs and kind of this race to zero with brokerage fees.
Yeah, I mean, it's all good questions. I'm going to do a disclosure. This is all my personal views, not Owl Rock's views, but I would say that these are all good questions. I mean, a couple things. I touched on the race to zero with brokerage fees. I mean, that the race to zero is going to continue. And I think you're going to continue to see consolidation in the industry. So smaller firms that have historically charged higher fees, that have to charge less, are going to get gobbled up by larger firms that can operate in scale and have a little bit more efficiency. If you're PIMCO and you can afford to charge 20 basis points on a managed account, you're going to probably win a lot of business compared to maybe a smaller manager that has a little bit better performance, but they're charging 1%, now that fees are more in focus. The robo advisor trend is really interesting. I think that it continues. I know that I look at my generation, your generation, and there's not a ton of folks that I know in my age group that want to go to a financial advisor and have a sit down meeting once a quarter to talk about their financial plan, let alone they might not even have a financial advisor, right? I think with the rise of cryptocurrency, you see a lot of people starting to trade themselves, Robinhood and things like that. It's just the access to being able to do things yourselves and online is definitely increased, and I think will continue. I think robo advisors is an interesting concept that will continue to take some market share from traditional financial advisors. I think the biggest difference is at the high end of the market, the ultra high net worth. Let's say if you have $1 million or above to invest, you do tend to want some more bespoke, customized service. And you want to talk to a human being and know that your money's safe, that you trust the person. I do think that one thing that technology can't change is that trust goes a long way, especially in finance and in investing. And that's why it's been harder to raise money when you can't talk to people face to face and be in the same room as them. That's why I think there will always be a place for in-person meetings and having a financial advisor and a human being that you can pick up the phone and call. But I think for people that want exposure and want to do it in a cheap and easy way, robo-advisors are a great option as long as they don't need that custom portfolio. I think passive ETFs, I'm not a huge fan of overall. I think that there's a use for them. What I've seen in the industry is you kind of have a barbell approach that a lot of clients take, where they say, all right, we agree that these markets are efficient. We'll take super cheap passive ETF exposure in US equities because we know, picking managers takes a long time. It's tough to pick, good managers, tough for them to consistently outperform. I'll just take, SPY exposure for my S&P 500. And then since I'm saving a bunch in fees on my passive beta exposure, I'll spend more and do more in private alternatives and where I can really generate alpha. So you're really seeing that barbell approach of like passive ETFs for beta and then spending more in fees for alpha opportunities. I do think that passive ETFs have their own issues. You look at when coronavirus hit back in March, and ETFs did their job, but there was also a period of time where ETFs traded massively off their NAVs because of the mispricings underneath. Here's a decent analogy, right? I'm a huge believer in active management. So like, that's why I'm not as big on passive ETFs. I think there's a time and place in portfolios for them. But when you go through a period like COVID, and you have the market that drops 30% in a few weeks, it's kind of the analogy of like, do you want to be on a plane and just let the autopilot do what it's going to do while you go through turbulence? Or would you rather have an experienced captain kind of navigating you through? That's the cheesiest like analogy you could possibly make, but I think it's so much true. Like, you at some level want somebody who knows what they're doing and has experience, and hopefully you're picking good managers that can pick winners and avoid losers, but because that's what you're paying them for. But I think the cheap passive ETFs do have a place in a portfolio. Like, I think it's tough to find an advantage if you're investing in all S&P 500 companies. Why not just use SPY and save your fees for somewhere else? The one question came in from Dolly: how did my first position prepare me for my current one? So I was an internal, and I was basically cold calling. I didn't have, Lord Abbott's not as big of a brand name as PIMCO. So I was cold calling on financial advisors, trying to get them interested in Lord Abbott. There's no sales experience like being on the phones, cold calling people that don't want to talk to you. You quickly learn to have a thick skin. You quickly learn different strategies for, all right, if this person's interested and they're, a personality that I need to make a hard pitch for, or maybe play the long game. Like, I think you learn a lot about people, what motivates them. And, I think overall, my first job, just being on the phones, talking about the markets, figuring out what questions investors like to ask, figuring out why they're asking a question is important, right? Someone might ask you a question, but when you're giving them that answer, you can just give them the answer. Or you can give them the answer and try to give them more context about, okay, I understand why you're asking this question. Here's the yield of the portfolio, but here's where the yield comes from, and here's how we get to it, and give them some more context behind the answer to their question, which can help lead to a sale. So my first experience, I think, was very valuable in just, talking to a ton of financial advisors, hearing what questions they had to ask, and figuring out what works and what doesn't. And I think the biggest thing I learned is that everybody has their own style, right? There's no one person in my job as an account manager that does things the same way. Some people are much more of like, relationship guys, don't care at all about the markets. Like, they're the ones that want to go drink a beer with you and go take you out to play golf. I think there's other guys who are on the other side that, you don't want to grab a beer with them, but they can tell you everything you need to know about portfolios. They're really ingrained in the markets. They're super smart. I think for me, I've tried to take an approach that's kind of a chameleon between the two, where I can adjust depending on the client and fit my strategy to the client's preferences, which I think has helped me in my career.
Thanks for that. I have a quick question for you too. So what advice would you give someone trying to get like their first job in the finance field for someone who's coming from a non-target school?
Yeah, it's a good question. I mean, I would say, leverage your network. So whether that's Cal Poly Pomona's network, whether it's, volunteering for CFA, Orange County is always looking for volunteers, where you can meet other financial professionals, build up a relationship with them. For me, every job that I've had since my first job, and I got it, while I was still in college, to today, has been because of somebody that I know. And so, not saying that person's going to hand you a job, but if you can get your resume from, leverage your network and be outgoing from the standpoint of like striking a right balance between not being annoying to those in your network, but making them aware, like, hey, this is what I'm interested in. How can I learn from you, and how can I help until at the point where you think I'm ready for a job. But like volunteering for your local FPA, doing things like Toastmasters, like all these things that might be somewhat goofy or outside of your comfort zone, I think give you experiences and help you meet people that can help you along the way. And that's really what I found is it's great to do the whole college career fair, the college network aspect, but also try and expand out of that. If you have your parents are in the industry or know people in the industry, talk to them. If you have friends that are in the industry, talk to them. If you're, part of a college team and you have, alumni that went to that team that are now working in a specific field you're interested in, reach out to them. I think there's a lot of people that are like me that are willing to kind of take some time and talk and try and help. And so that's what I would say is my biggest suggestion.
And we
Cool.
we
Appreciate that. Thank
definitely appreciate that, Matt. So I know we're almost at 1, so I want to be respectful of your time. So hopefully you have a little bit of time to set up for your call at 1. But thanks to everyone that asked questions, and thank you for coming. Yeah, if you want to part with anything else, that would be great. But we really appreciate you making the time.
No, of course. I'm happy to help. I saw one last question come through from Allegra, and since she brought me here, I'll answer that and then head out. But I would say one thing that could be interesting is so CFA Orange County. I joined their board earlier this year, and I'll tell you a quick story about just like being creative and trying to figure out like how can I meet people that can help me in my career and personally. So COVID was still going on. I joined Owl Rock in May. I was finding it really hard to uncover new opportunities, right? I had success with my PIMCO clients that I knew. They took my calls. We had a good conversation. But given I wasn't able to travel, I was trying to figure out how can I build more relationships and target, people in the local Orange County community. The president of CFA Orange County, her name's Mary. She's the best, super busy, but she's also the COO of a large family office here in Newport. And I worked with her at PIMCO. I reached out to her a couple of times while I was at PIMCO from my Owl Rock email. Hey, Mary, I moved to Owl Rock. I'd love to catch up, trying to get her in as a new client. Never answered me. I was like, let me try something else. I reached out to her president at CFAOC email. And I said, hey, Mary, would love to help on the Owl Rock front. If you ever need anything from an education standpoint, we could do a presentation on private credit. We could talk about direct lending. Like if you need sponsors, let me know. We're happy to throw some dollars at CFAOC to partner together. She responded in 10 minutes. And I was happy to have a conversation with her and tried to help her out as far as we've got some education things planned around private credit. She loved how enthusiastic I was. And for me, the goal was hey, here's somebody who's a potential client, but also I'm a CFA. I've never really done much with the CFA that I've had other than put the letters behind my name. How can I get more involved in the community? And so we had a bunch of conversations. She, fast forward, I won't make this story too long, asked me to join the board. And so now I'm on the board and now I have connections to all these different CFAOC members in Orange County. It's led to I'm not getting 15 different new prospect calls from people where I've, had a conversation about CFA volunteering or project I'm working on, and then I, subtly ask about their business, and then we have a conversation about Owl Rock on the side. So that was just an interesting story about trying to be creative. I think if you're a good person and you try to do well, and you're polite about it, people are willing to try and help. And so I'll cut to the last chase, which is if any of you are interested in getting involved in the CFA Society of Orange County, feel free to reach out to me, let me know. We have a ton of different volunteer opportunities open. It's been a little bit of a challenge with COVID that we, don't have in-person events, but typically we'll have an in-person event. We need people that help check in, CFA members. We need people that can help us with marketing, that can help us program. Allegra's helped us out. We're going to try and do some more stuff with everybody in the future, but I'll put my email address in here and feel free to reach out to me if you're interested in volunteering. We can have a quick conversation, figure out, where your interests lie, or in the email, send me hey, I'm interested in helping out XYZ. And, we can put you in touch. And for you guys, it's a good opportunity where you can meet more people around Orange County that are CFAs. They own their own businesses. They're part of a business. You can learn what they do, and hopefully it'll help you guys make some more connections. So I'll leave it with that, but thank you all for having me. I hope this was helpful, and I appreciate the time.
It was great. Thank you so much, Matt.
No problem. No problem. I'm going to put my email address in here. So feel free to reach out to me if I can help. And I will, I'll talk to everybody soon, hopefully, and be well, stay safe. Have a good rest of the week.
Stay safe.
Yeah,
Thank you, Matt.
you. Pleasure meeting you.
Take care, everybody.
Thank you, everyone, for joining.
Thank you, everyone, for coming. Hope you guys learned a lot. I certainly did.
It sounds like he'll be back for He'll be back for Albie's talk on blockchain and crypto.
Albie, are you here?
I am right here, very excited for next Tuesday, talking about blockchain, the fundamentals on how it functions technically, and perhaps the future of where money can go.
We're
Nice.
excited. We're excited.
Very excited for that, Abby. It's going to be a great talk.
And then next week we have, if Cam and Kyle are here, they're going to be doing the final presentation to decide the winner of our mini IRC competition. So we're also excited for that.
Yeah, looking forward to it.
Yeah, if you have any questions, this applies to Kyle too. Just ask us, we'll tell you. Because I know you and Allegra went back and forth about how the presentation might differ from the actual report. It can be completely different, right? So just know that. But if nothing's changed fundamentally with the company, you're sticking with it, go for it.
And last
very
little
loose.
announcement is we don't have stoles available anymore, but we do have some extra shirts. So if you'd still like to be part of SMIC Plus and get your shirt, we'll have some shirts with some sizes. And if not, there's always next semester. But
So
thanks.
that way, when we're in person in the fall, you guys can all be repping some student managed investment club.
That's true.
So you guys have a bunch of Doge. And
Yeah.
That's what we want.
Yeah.
So what's next week?
It's going to be a presentation with Albie on crypto and blockchain.
Okay, thank you.
Fundamentals.
Fundamentals of crypto, yes.
All right, Brian, I think you can stop the recording now.